Yes, sir. Yes, sir.
Okay. Let me say, I think we have a few minutes more to say good afternoon. So let me say very good morning to all of you. The organizers of IBEX India 2021, the distinguished invitees, ladies and gentlemen. So let me first of all express my sincere gratitude to the organizers of IBEX India 2021 for inviting me for delivering this special address today. Of course, I think the most part of this program appears to be on technology. Again, I think this virtual seminar also another type of technology which we are using due to the COVID-19 pandemic. So hopefully, I think there won't be any disruptions to the virtual program during my speech. If there are any disturbance or anything you can't hear, please let me know. Okay. So with that, let me focus to the topic. Niche is the new local. Expansion strategies for financial sector. So I think that's the topic which was given to me. And before I move on to the topic, let me start with saying the developments that has taken place in the banking industry throughout the past so many decades, where we now focus on fintech, but it has undergone a number of developments over the past so many decades. Convergence of financial services, creation of financial conglomerates, the consolidation of balance sheets, geographic expansion, proliferation of services, adoption of technological advancement, which happens to be the fastest growing area in the field of banking and financial services industry. So as a result, the banks required to change their business models from traditional banking to non-traditional banking, which has also resulted in decreasing margins and sometimes high infrastructure cost as a result of the high competitive environment. So technological development, especially in the financial technology, fintech, has been the catalyst in driving banks in this process during the past decade or so. From another perspective, fintech have entered the banking space due to their in-house capacity. So therefore, at present, the dilemma is whether technology disruption will be the end of traditional banking era and the fintech will rise to rule the banking world. So with that developments that have taken place in the banking industry, especially as I mentioned, the very last part of technological advancements, the banks themselves, financial services industry itself has undergone number of risks. So the regulators also have changed their regulatory environment during different periods, focusing different areas to protect the banking industry. As you see, the latest, is Basel III Accord, which came in, of course, 2007, 2009 period due to financial crisis. But there have been subsequent development, especially focusing on technological areas. Now, in this context, let me brief you on how bank can differentiate their strategies to meet fintech challenges. Firstly, it is required for them to identify the right business model. In the context of developing a fintech framework, So what are the things they need to consider in developing a fintech framework to fit into the business model, which is not easy from the bank's perspective, especially the competition in the industry, the investment. So the banks are required to invest heavily on technology and digital transformation. Sometimes some banks may find it a little bit difficult, given the size, the nature, and the target groups they cater. May not be very cost effective, but this is a very big challenge unless they move from their traditional banking model to new banking model. So they cannot ignore the innovation. Traditional banks cannot ignore the innovation. Okay? The other area they should focus is recruiting the right talent to harness the innovations. You need people who are capable of introducing these products to the business model to ensure competitiveness and also protect the banks from any risk. So you need the people, the right employees, officers with right talent. Again, another important area is identifying the digital risk. So with the innovations, these are few things that banks need to focus on. The next point is customer experience. Customer experience. So, so in that context, what is important is identify the products the customers need, they structure the products in the right way to suit different customer profiles, such as demography. So sometimes you can't have the uniform, type of products, the different needs, especially if you look at countries like India, where the demographics are substantially different from one area to another area. Okay, large countries like that. So there's a specific focus bank should put on is demographics. The level of technology experience. Again, in this context, financial literacy need to play a greater role. So, so you can't have one, size-fit-all model in that context. That again, time-consuming and costly process. Then the focus groups. There are many focus groups. The untapped areas, the underserved areas, the grassroots level, the low credit-worthy customers, versus the the banks would like to cater, as the loyal and high net worth customers. How do you fit in your model to link to the customer experience? Next is the market. So what is the market you are treating, the gaps in the market, the requirements in the market, and overall financial system within which you play around. So under the developing the fintech framework to identify the business model, so banks need to focus on these specific areas: investment, innovations, the customer experience, and the markets. So let me move on to the second point with respect to the business model. How the banks or financial services industry can integrate fintech ideas into the banking model. It's very important to integrate innovation and disruptive technology to the banking model and products. So in this regard, specifically important to have a collaboration with fintechs. So where it's very important to identify the strengths and weaknesses in adopting fintechs. Try to integrate fintech ideas by partnering with fintechs. Now, from the regulatory perspective, when you move or integrate with fintech is important, the risks arising from integration, especially the IT security. So it's very important. If you look at certain, IT-related incidents that has taken place around the world. So this is one of the key important areas probably regulators could look at it when banks are in the field of, modeling or integrating their business model into fintech. So let me now move on to the next area, how banks can offer that niche and align with the market needs and differentiate among different customers. So it's very important to focus on, as I mentioned earlier, focus on customer, profiles, where it is very important to identify reinventing the customer service, with the developments in this area. Prioritizing 24/7 access via non-traditional channels such as social media, provide research where customers could compare their bank offerings, which they didn't enjoy earlier, so that they can have a better judgment on products and services. What is most cost effective? Let's say, take example of a loan, take example of a deposit. So which one best suit for them? So a lot of information available, easy access, cost effective, so that their life would be much comfortable. Then channel diversification also be a key driver in the banking sector. Now that means how the people are used to use mobile applications. Again, usage of website and web-based platforms, which is very much comfortable compared to traditional banking, branch-based business model. So, and also how the customers' engagement via mobile, how to enhance that factor. So that's another point that banks need to keep in mind. I mean, it's not just the banks are into fintechs, which will benefit them, but how they can integrate to the other stakeholders in the society. Now, from the point of view consumers. Then smart solutions. Now, how banks can address the problem of customers unable to get loan with less credit or less or poor credit scores. Now, this has been a problem area in many countries. Of course, the banks would like to serve the high net worth customers with good credit scores. But there are the two important things there. So their risk is less, other is cost effectiveness. But with smart solution, the banks can introduce products, services, so that they can still assess or reach or provide services to the people with poor credit scores. Then under the smart solution, the second point is peer-to-peer marketplaces for customers unable to secure loans from the traditional sources. Also, personal financial management tools which would guide these target groups to access to finance. Let me now focus onto the area of how the banks can serve the underserved. Now, as you know, in any economy, any country, inclusive growth and financial inclusion are key priorities, especially in the context of a developing economy. Okay. So in that context, it's very important how we can integrate the fintech development to achieve these objectives. So I would like to mention a few areas how it could bring in benefits. Expand into cross-border transfers, which enables to promote economic growth beyond your geography to other areas. So which would finally help to identify different markets, different customer bases, subject to controlling risk, where you can achieve the target growth and financial inclusion. So the second thing with respect to serving the underserved, I would like to mention how to design an accessible products and services. So people with little or no access to mainstream financial services represent the massive growth opportunity for fintech sector. So these are the target group I think we should focus on. So in fact, those are the groups which can bring in growth and develop to economy, especially developing countries. The next point is create a fair price product. So that's again important to look at. I'm not very sure about Indian banking system, but in Sri Lanka, sometimes the product prices, the pricing of products are sometimes, not at acceptable levels. The fees on different products and services, different time on different banks, and also sometimes, fairly high. So here in this particular development model, you can think of creating a fair price product and services. Now, in that context, I want to mention that prohibitive banking fees are some of the major reasons why adults do not use or have no access to mainstream banking services. So people are reluctant to adopt or even maintain a very simple savings, account because unnecessary cost that they have to bear operating such an account. So the fintech development can eliminate this factor because it can create better cost efficiency in terms of pricing product and services by the banks. Innovative technologies can enable fast-paced transaction. That's the other important thing. Transactions are pretty fast. The low cost and customer identification and verification process, such as know your customer services. So this again has been an obstacle for many developing countries when it comes to traditional banking. How you can follow KYC, rules in terms of respective regulations in those countries to identify customers through physical verifications. But I think many countries now technology has helped, especially these products could help to avoid that because it's much more less costly to follow a KYC process. Again, another important factor is improve economics of supply chain by digitally enabled physical access points such as smartphones or point of sale devices, which again I mentioned earlier. So this will improve customer profiling, the fraud detection, and credit risk management by integrating blockchain in financial services that significantly enhance access to credit by using alternative sourcing data such as payment transactions. So this again useful in many aspects, especially when you consider serving the underserved. In relation to savings, fund could be mobilized digitally through alternative distribution channels, such as mobile wallets connected to savings account. So as a result, a secure KYC will also help in providing access to savings account for the unbanked sector. So while it gives benefit in terms of financial inclusion, development, growth, and KYC, now there are risks, or there are possible risks the people would undergo, which carefully need to be addressed. So given the literacy and also financial literacy, I think some countries both are important, not just the financial literacy. So lack of consumer understanding. So you have to create awareness, greater awareness among these target groups. The mis-selling of products and services by certain parties. The financial exclusion, instead of financial inclusion, it may lead to financial exclusion with certain parameters. Also, the people may be reluctant due to data privacy, security, and protection. So these are few possible risk areas where the banks need to look into when serving the underserved. Okay, let me now move on to the area of leveraging API technology for growth opportunities. Now, how APIs, application programming interfaces, could help in this whole process. Okay. Now, so let me first ask how the RPs are used. The price comparison sites, RPs are generally price comparison sites, peer-to-peer currency exchange and lending, investment management, payment processing. Now, what benefits someone could benefit from RP? The boost overall cost effectiveness. Now, API development enables numerous services via different application integration, so which will bring in, cost effectiveness. The second area, they promote data sharing for a better experience. Now, the banks were so possessive of the user information and a lot picky when it come to sharing of data. Because they have a lot of information about the customers. Okay. Now, users with full control of their data are in a position to demand banks to allow their data to be shared with their desired third-party provider. So that's again a very good benefit with use of APIs. Higher competition, which again lead to higher competitions, which means more services. So the emergence of APIs has increased the competition in the market to benefit of the customers, at least for the customers. Okay, at least for the customers. So due to this point, the prices in the financial industry are going down rapidly due to the various variety of services being offered. So, as you know, leveraging API technology has paved way for greater growth opportunities in terms of boosting overall cost effectiveness, promoting data sharing, and higher competition means more services. So let me discuss few points on as a regulator, few points on regulatory concerns as a result of tech development before I stop my speech. The fintech itself has created risk to the regulators. How the regulatory frame can also be built into fitting to the models of banks. You can't stop banks adopting the technologies, especially the fintechs. How the regulators themselves can fit in to the right business model, their regulatory framework. So, so the regulatory approach is based on the experimentation and the level of regulators' involvement. So this is one important point from the perspective of regulators. Sometimes someone may feel like fintech development is another version of shadow banking. Okay. The fintechs could be developed in the banking system or substitute direct competitor to the banking system as a direct competitor to the banking system. So that's why it's very important from regulatory perspective to standardize the fintech developments in the banking system. Otherwise, it could mislead the financial consumers via a lot of different products that fintech will bring in. So the major supervisory concerns regulators would have is how viable the business models linked to the new developments. The governance structures of the respective banking institutions, how well boards and senior management understand fintech and its related risks. This is an important area for the regulators. The risk management function, how they can align the risk management function. Now, when it comes to certain fintechs, there may be outsourcing. So there may be a lot of risk concerns with outsourcing. How do you align that? How the banks address cybersecurity. Then artificial intelligence and machine learning. How well the firms could control and mitigate the risk arising from AI and machine learning as banks move to use AI and machine learning in a rapid way. And also how, as I mentioned, supervisors can improve the supervisory process to fit into the use of fintech. So basically, regulators will look this from a financial stability perspective, where basically they would like to focus on the concentration, other alternative channels of financial intermediation, use of crypto assets, which could result in system-wide vulnerabilities. So it's not just for the bankers or the people who are in the industry, financial service industry. Regulators themselves need to focus its strategies, the supervisory processes, regulatory framework to align into these developments. So in that context, let me highlight a few points where I would consider major regulatory responses from my point of view. So changing the regulatory perimeter, disclosures to customers to make them more aware of these things, products, services, the risks involved, limits on retail investor access. There may be, gradual, introduction. So there may be limits. Governance structures, set right governance structures. Ensure the banks and other players in the industry have proper risk management systems in place to identify the risks and manage them properly. Improve operational resilience of firms. Okay. Especially data protection, important area. How the banks could ensure the data protected. Okay. So many countries, there are a lot of regulations with respect to that. And finally, AML concentration and competition. So this again an important area today context, anti-money laundering. So how the regulators can okay. So let me conclude my remarks with that short remarks. Of course, I think please excuse me for running a little bit over the time, but I hope these are the key important things we need to take into account in terms of fintech development. So let me once again thank the team from IBEX for inviting me for this presentation, and I hope your event, this two-day event, will be a whole success, and all stakeholders will benefit